Hi everyone, and welcome to today's Altcoin Bible. I have a big episode for you today. Our one to watch is an OG cryptocurrency known as the silver to Bitcoin's gold. We've also got a cherry ripe today, which is an exchange that could be looked upon as crypto's central bank, if not behaving like one at the moment. And we've also got a very popular sentiment-driven crypto, which could emulate Luna, and that is not a good thing. I'll explain why towards the end in our danger zone chart. But let me get straight into our, this is our cherry ripe. So fantastic. Let's start off with the positives. FTX. So this is the exchange that currently is behaving a little bit like crypto's central bank. They are coming in and bailing out a lot of platforms. We've heard about Celsius and BlockFi providing credit lines. So that's very, very interesting. It does save the ecosystem to an extent of seeing some massive liquidations and massive sell-offs in the near term. So that could be a very, very good thing. But FTX, I believe, just buoyed on this positive sentiment behind it, is seeing a little bit of a bounce. But a lot of these cryptocurrencies are, 70, 80, 90% down from their highs. So we are running into areas where buyers should be very, very interested. So we're seeing bounces across the board, some more so than others, and some just aren't bouncing at all, which is a concern. But FTX for me looks like in a really good position because of that narrative that it does have right now. Also overlaid a few indicators for me that I think look quite promising for a cherry ripe. Now, there's likely other cryptos out there that look like this or even better, but I wanted to focus on FTX because of that narrative. I think it's really, really relevant for what's happening today in crypto. So let's just dive in real quickly. I've just overlaid the Fibonacci retracement tool. So that's on your left-hand side on TradingView if you want to use that. Just very, very helpful. They're mathematical lines that generally you see price gravitate towards. And because a lot of what you're seeing here, the candlesticks, all of this price action, it's very much psychology based. And traders and big movers, they look at these levels. It all becomes together, it's like a self-fulfilling prophecy. So levels get bid or levels get sold when some of these levels are hit. Now, they have to actually, actually get hit for us to pay attention to them and for me to show you. So they have in this instance. So the 0.786, look, often on daily and weekly charts, so the higher you go daily, weekly, monthly, the more data you are getting. But you'd be very, very surprised how often when a crypto gets, let's say, makes a new high and then it has a big full correction, be surprised how often it actually comes back to the 0.786. So you draw it from, let's say, the impulse, the start of the pump going up. It's a bit subjective on where you can draw it, but this is where I've drawn it from. And you can see here that we've had a beautiful pullback to the 0.786, stacked a little bit below it, we bounced back on top of it. You can see these lows back here at 21, they all came back to the 0.786. So for me, this is a really strong area of support. You can also see that by the volume profiles on the right-hand side. So what I'll do, I'll get rid of this Fibonacci retracement just there. See these bars of volume. So these are areas where there's lots and lots of buys and sells hitting exchanges, meaning at that price area, we're going to see price get a little bit sticky in terms of it finding support or it running into resistance. So I find these volume bars just incredibly helpful. So to access these or to look at these, you'll need the higher tiers of TradingView, but I just recommend them, can't recommend them highly enough to have them on your charts. Generally price adheres to those areas if you're looking at a broader term time frame. Okay, just quickly as well, I want to see FTX for this to really start to run up into these areas here. So let's say the 100 moving average on the daily. And that's a good spot really, because that's just under this volume profile where we should expect to see some resistance running into these areas, as well as it being the, let's say, the bottom for this price area of action. But regardless, for this to actually move up, so far, it's promising. It's above the 21 moving average. So that's really nice. It broke above, now it's retesting a support. I want to see more volume come through, and that's what we really want to see come into the market. We want to see more buyers follow this higher, and that's the only way it's going to move up in this kind of environment. If buyers just aren't there, this will just roll over, come back to support and maybe go lower. But so far, it is looking promising. And we're also seeing that down here on the RSI. You can see just this sloping up formation. So bulls are gradually gaining strength while sellers are weakening at the low here. So for me, that's a really positive sign. But again, the volumes look really low in these areas, but it's not that crazy in bear markets for volumes to be low. We just want to see that at the very least, buyers are coming in to a degree. Just quickly on the RSI as well, it's a good momentum indicator just to have a look at where we sit and where we knocked here on this bottom. That's down at 24. If you go back here, it was actually lower than the low in 21. So that's an interesting indicator. Just to me, this shows that this area of support is super strong because it is rocketing into these areas. And we can, look at this oversold RSI and think to ourselves, okay, well, it's actually deeper than the last one, and now we've had a bounce. So are we going to come back and make a lower low? I don't know. But for me, FTX is looking really good based on what I've said before about the narrative as well. So bulls are definitely picking up steam, and the RSI looks to me like it has bottomed for the short term. Doesn't mean it won't bottom for the mid to longer term if we have a larger drawdown in the macro or Bitcoin, but just something to keep your eye on there. All right, now the silver to Bitcoin's gold. It is an OG coin, Litecoin. It also has a fixed supply, and in previous cycles in 2017, if you were here during that phase, the narrative was that Litecoin was the test net for Bitcoin. So quote unquote, it was the silver to Bitcoin's gold. And it had it still does have a really big following as well. It's an older coin, it's lasted multiple cycles. And in previous cycles, it actually led Bitcoin in certain price movements. So that is interesting in itself. But Litecoin, it's like FTX, it's found a pretty significant area of volume support. You can see this gigantic volume bar. And I've gone out to the weekly because I want to give us a more zoomed out picture. FTX doesn't really go back that far. So, go to the weekly you could, but on Litecoin, it's more useful because it's been throughout multiple cycles. So we have many years of data to look at the weekly. This whole structure here was the 2017 top, and we had a long drawn out bear market where we went into this triangle, eventually had a really nice breakout from that triangle and created, well, at least tagged the high. I think we got just a little bit higher. But yeah, Litecoin, very interesting. And what I like about this chart, and why it's my one to watch, if not, it's close to cherry up, but it's not quite there because we're still quite bearish. We haven't seen a change of the trend, and that's what you do have to indicate is to yourself. Just make a mental note that while things look oversold, you're hitting support and all that, doesn't mean it's the end, because we haven't really changed direction yet. We haven't changed the trend, and that's what you want to see for confirmation. And generally, when you see that, it's when we begin to get above key area, or we get above some key moving averages. Right now, Litecoin is below it's the 200, the 21, the 100. You just can't be bullish in that situation. So what we are looking for is prime accumulation areas for the longer terms, for the next cycle when it moves up. But what I like here is we've got Litecoin that bottomed in December 2018 there. Then we had the COVID crash there in March 20. So that was actually a little bit higher, but you can see on the RSI how low it got. So it got down to 28 on the weekly. COVID didn't even really register down those levels, so that's interesting. The price just gradually gets higher, and now we've had another low down here. Where's the RSI? It's at the bottom of the bear market region, 28-esque. 2018. So that for me is a really good sign, confluence. And also, as you look through this area here, you don't really have too much volume coming in here apart from this big sell area on the COVID crash. But right here on this low, we do have a really nice strong buy candle. Now that in itself is a good sign, but you would also want to see, some sell volume, some more buy volume as well, just to indicate that this area is a really strong point of contention. But this volume bar here tells you that right throughout here for multiple years, it has been a really strong area to buy Litecoin for a bounce. But again, no bulls have shown up. So the RSI, it's still sloping downwards. There's been no trend change. You really want to see this begin to break upwards. So that's on the weekly. This is a really high level zone. You can, and I've got, I'll explain what I'm doing in the newsletter in a sec, but what you want to look at is go to the highest level possible, go say to the weekly and begin to draw high interest zones where you get very interested in layering capital. So right here, this would be target number one because of the severe support that you should get around this area, and it is. You also want to have a look a little bit lower as well, but yeah, Litecoin's an interesting one. We've had, what's this? So from the high, we're down about 90%. So that's about right for most of these altcoins. So eventually the trend will change, but it is for now one to watch. All right, let's get into Tron because a lot of people love Tron. It is very much a hype-driven crypto. It has, multiple use cases and things being built on it and all that. But for the most part, it is heavy on marketing, heavy on hype. So through that lens, I wanted to bring up the chart because most charts are looking a bit dire, obviously, but I wanted to go a different track here, have a look at Tron on the weekly. Now, if you're looking at, I'm looking at this, it actually doesn't look too bad on the weekly. You've got Tron making the high, and then it's compressing into this triangle. You know, it's had a massive wick down to the 200 weekly, and Tron's a relatively new coin, so and relatively new, it's lasted since last cycle. But the 200 weekly moving average on Binance only starts here. As a wick down, didn't reach it. For me, that's quite a nice sign. It had a breakdown, and now it's burst back into this triangle trend. It could look to burst out. And I had this drawn here a few months back about what I expected, because when you get into these triangles, when you begin to come up to the ceiling supports of a pattern, you generally can see this come back down to test, or there's a fake out to one side. There could be a bust up, which is a fake out, and then crush to the downside for the continuation of the trend. But what's looked like has happened is it's been bought up heavily as it broke down, and it's back above. So this could very well break to the upside, but I just want to talk through this because the volume support here is really, really nice. But just under this, we have this enormous pocket. So if for whatever reason, and I'll tell you why that I'm a little bit bearish on this, is if this breaks and the market does continue to bleed out harder and we see dominance move more to Bitcoin, we could see this drop all the way down. So this would effectively halve from here. That's where Tron would go. I mean, it would run into resistance here, of course, but that would be the target for me on this look, because generally when price dips into these gaps, there's a bit of a gulp and there's no oxygen, and it will just drop all the way down. There's some good volume coming in, of course, on this sell, absolutely. But what concerns me with Tron right now, a lot of this, and you could say in here, this has been shown a lot of relative strength compared to Bitcoin's instability and other altcoin instability. But this is a lot to do with what Justin Sun is doing with the USDD. So it's a stable coin that is exactly, if not identical to UST and the Terra Luna situation. So they've been buying up heavily Bitcoin to back, or to put as a form of collateral around this stable coin as well. So he's been buying. There's been a lot of positive feeling around Tron in this respect. Then Terra Luna happened. Tron's continued using this stablecoin and continued buying Bitcoin. So there's been a lot of relative strength because of that, in my opinion. But what happens if the USDD coin, like UST, depegs? Because you'll see the exact same thing happen with Tron. They'll be forced to sell a lot of these reserve dump Bitcoin on the market. I think they bought $100 million worth of Bitcoin the other day. It's not on the same level as Do Kwon, where they were buying billions, but it still matters, and it matters for Tron because it has a similar system that backs this stable coin. So they'd have to sell Tron as well. So it creates this sell pressure. And again, it's not identical to Terra Luna, but it is going to be similar if it breaks. And lo and behold, what is USDD doing? People are trying to exploit this because these algorithmic stablecoins are still highly experimental. They're a science experiment. It's blowing up in everyone's face if you apply the correct pressure in the right places. And it is being applied. If there's any weakness in this space, it will be exploited by larger players with a vested interest. And they'll go heavy. I bet you a lot of money right now that someone is very heavily short USDD after UST situation, and they might be trying to do some funny business on the other side, trying to depeg this stablecoin. What's happening right now? It is depegging. It is 0.975. This is how UST started to spiral down. Now, if you have looked at stablecoins for a while, stablecoins have to be pretty much pegged 1-to-1 with US dollar or a US dollar equivalent. And right now has fallen below 1. And it is very, very difficult for these stablecoins to get back to 1 unless there's a rebalancing or they sell assets. So again, if this trend continues downwards, gets below that 90 mark, it's going to be in a lot of trouble. They'll be forced to sell assets. So I just want everyone to keep that in mind when you're looking at a chart like this. There might be more going on behind the scenes. And when these cryptocurrencies link themselves, almost they're fake, they link themselves to a systemic risk right now. It just seems very, very silly. And it seems super, super silly that Justin Sun is still barreling forward with this after everything seen the UST. They might have a way around that they can, stop it from happening. And it may not play out exactly like Terra Luna, but there are huge, huge risks because a stable coin, you want to be stable, but these algorithmic stable coins aren't really that stable if the peg breaks. And because there's not a lot of capital surrounding them, there's not a lot of collateral behind them, it can be very easy to game if you've got enough money and enough vested interest in doing so. So I wanted to get that across with Tron. That's my danger right now with Tron. Again, I could have done the easy route and picked any of these cryptos that look quite sad on their support levels, down 90%. But this is an interesting, relevant take in light of Terra Luna. So if you're exposed to Tron and USDD, I would highly recommend you analyze your risk very, very carefully here in this moment, in this environment. Okay, let's kick on over quickly because I just want to share something about the newsletter that we're doing going forward. So for our buy and sell levels, if you didn't watch the episode previously, and if you did, I'll just reiterate again that with the charts that I'm doing now, I'm going to go out to the weekly because I just think it provides so much more information. This is last month's newsletter, so there's no new information here, but I'll be going out to a weekly level on our charts and provide you the longer term accumulation zones that you need to be paying attention to. And I also still provide sell levels and danger zones, of course, but the sell levels will be more midterm targets where you'll want to start taking profits off the table as the cycle matures. So I just wanted to get that across because I think the daily charts and the short-term buying and then going for these shorter-term take profit levels, I just don't think it really applies in this market situation. A lot of the sell levels aren't getting hit because we are in a bear market and any rallies will get faded quite heavily. And at the end of the day as well, we're not really here to do short-term trading. A lot of people here, like myself as well, I'm a long-term investor. I don't really want to be mucking around with those shorter term timeframes. Some people do, and you can still use these signals to do that. But I think it's just safer and better and more valuable for you as well as a subscriber to have that in the weekly format. Just quickly as well, if you're not a subscriber to our weekly newsletter and you're looking to get in this market or you've already bought into this market, but you're just starting to set up your risk profiles and work out how you're going to approach everything and how to construct a portfolio. In this newsletter, Joe, myself, and Tristan, we put in a portfolio breakdown of low risk, medium risk, and high risk. It couldn't be more simple to see in a visual pie chart exactly what you likely should be structuring your portfolio with to to represent a low risk situation. Because a lot of people don't know what is low risk, medium risk, and high risk in this market. So we'll just do it for you. We'll give you a bit of an explanation of why we're constructing a portfolio. So again, this was last month. It will change for this coming month, but just super, super useful for a new investor to just visualize what should I actually be focusing on right now? Am I focused on too high risk, altcoins everywhere? It's just not what you want to be looking at right now. So this, I think, is just super, super useful. Again, there's chunks for short-term plays. When you get a bit more advanced, you can do that. Open for business. Joe's got some great names for these. So yeah, just keep that on your radar. And there was one last thing I believe I wanted to cover. Oh yes, that is right. So because you've watched this video all the way through, I was going to give you a little Easter egg because every month we likely will have an in and an out in our portfolio. And I want to just give you a bit of an early release, early access sort of idea around this. So we're actually dropping Solana in our upcoming portfolio and we're bringing in Chainlink. So our reasoning behind that is there's a bit of smoke and a bit of risk around Solana right now. There's been a lot of network outages. There's some issues around whale manipulation. Now, you can't really pin down whether, how much of this is true, all that. But we're of the mind right now, especially in the wake of UST, Luna, Celsius, BlockFi, a lot of things, a lot of risk is coming to the surface. And if you smell risk on the horizon, what is the harm in going defensive, stepping away until the dust settles and you can really understand the situation? Because right now we do not want to be looking or entertaining any risk whatsoever in our portfolio. And right now Solana has there's a bit of a smell about it and it might amount to nothing, absolutely, but why even take the risk? So we're stepping away from Solana and looking at more at Chainlink because we think going forward, as its use case is incredible. A lot of layer ones and layer twos are going to need Chainlink interconnectivity. We know that through Tristan, and he's going to be doing the FA on Chainlink this month. That doesn't mean Chainlink's going to stay in there forever. All these cryptos doesn't mean they're going to stay in forever either. And that doesn't mean you have to construct your portfolio exactly like we have done. We're just constructing it in a way that we think is best for everyone and that holds the lowest risk possible if you're looking at some sectors of crypto. So guys, I wanted to share that Chainlink in, Solana out. yeah, I hope you have a wonderful day. And if you aren't a subscriber to the newsletter, I mean, it's less than 10 cups of coffee, and we give you a tremendous amount of information and data. I know a lot of you are subscribers, and I just want to thank you so much for supporting us through this, because it is a lot of work each month. And look, we're just here to help people. And yeah, look, we haven't seen any newsletter like this. So yeah, drop us a review as well. If you are an avid reader of the newsletter and you like what we're doing, if you don't like some things that we're doing, or you think we can change some things, let us know. This newsletter is for you guys. So keep that in mind, reach out to us. Hope you enjoyed this Altcoin Bubble, and have a great day, guys. Bye.